This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Thursday on signs of easing trade tensions, stronger than expected economic data from the world's top oil consumers and renewed risks in the Middle East. Brent crude futures were up 17 cents, or around 0.3%, to $68.67 a barrel at 0856 GMT. U.S. West Texas Intermediate crude futures were up 31 cents, or 0.5%, at $66.69. Oil thinking has been distracted from the Middle East, and the reminders of Israel's attacks into Syria and the drone attacks on oil infrastructure in Kurdistan are timely and once again add a little fizz to proceedings, said John Evans, analyst at PVM Oil Associates.
U.S. crude oil stockpiles fell last week as exports rose, while gasoline and distillate inventories rose, prompting some concerns about fuel demand, the Energy Information Administration said on Wednesday. Crude inventories fell by 3.9 million barrels to 422.2 million barrels in the week ended July 11, the AIA said, compared with analysts' expectations in a Reuters poll for a 552,000 barrel draw. Crude exports rose by about 760,000 barrels per day to 3.5 million barrels of oil per day, and net U.S. crude imports fell by 395,000 barrels of oil per day, the EIA said.
Moving on to the top news in the energy sector.
The U.S. generated more renewable blending credits in June than May, data from the Environmental Protection Agency showed on Wednesday. About 1.25 billion ethanol, D6, blending credits were generated in June, compared with about 1.22 billion in May, the data showed. Credits generated from biodiesel, D4, blending rose to 629 million in June from 602 million in the prior month, according to the data. The credits are used by oil refiners and importers to show compliance with EPA-mandated renewable blending quotas for petroleum-based fuels. They are generated with every gallon of biofuel produced.
India is confident of meeting its oil needs from alternative sources if Russian supplies are hit by secondary sanctions, Oil Minister Hardeep Singh Puri said on Thursday. Earlier this week, U.S. President Donald Trump warned that countries purchasing Russian exports could face sanctions if Moscow fails to reach a peace agreement with Ukraine within 50 days. India should be able to deal with any problems with Russian imports by seeking supplies from other countries, Puri said. He noted there are many new suppliers coming onto the market such as Guyana and supply from existing producers such as Brazil and Canada. Next, we have the top news in metal markets. Copper prices edged down on Thursday as the dollar strengthened and stocks in the Asian warehouses registered with the London Metal Exchange kept on rising in anticipation of the U.S. 50% import tariff for the metal. 3-month copper prices on the LME fell 0.2% to $9,616 per metric ton by 0955 GMT as they continued to retreat from the 3-month high of $10,020 a ton set in early July. Some copper previously planned for the U.S. is coming back to the LME system after Washington said last week it would impose a 50% import tariff on copper from August 1.
Prime Minister Mark Carney on Wednesday said Canada will introduce a tariff rate quota for countries with which it has free trade agreements, excluding the United States, to protect the domestic steel industry. A 50% tariff will apply to imports from these countries that surpass the 2024 volumes, though Canada will honor existing arrangements with its United States-Mexico-Canada Agreement trade partners, Carney said. Canada will implement additional tariffs of 25% on steel imports from all countries containing steel melted and poured in China before the end of July.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures closed down on Thursday, erasing gains from the previous session, on profit-taking after reports showed weaker export data for the July 1 to 15 period. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange lost 12 ringgit, or 0.28%, to 4,212 ringgit, $991.76, a metric ton at the close. The market is cashing out on the news of weaker export despite a supportive Dalian palm oil and Chicago soil, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.